Welcome to our tax clarity demonstration. My name is Dan Gatus. Before we get started, when you first joined the meeting, the fine folks over at GoToWebinar popped up this nice little box on your screen. You probably minimized it. If you could, just go ahead and open that up, find the section that says questions. You can pop that open, close the rest of it, and when you have questions throughout the presentation, type them on in, send them on over, and we'll go ahead and work on getting those answered for you. That being said, quick agenda is I'm going to give you an idea of who Covisum is and what we do and why. That's probably going to take a couple of minutes. I also want to introduce you to the blog and some of the resources that are available to you as a free trial subscriber and resources that are going to be available to you when you become a full subscriber. Again, another couple of minutes there. Then we're going to just jump right into the software, enter in some cases. I'll show you how it works. If you've got questions, ask them, please. We'll go ahead and get them answered. There's a lot of things that you can do to help illustrate certain planning options that you might want to show your clients to identify maybe harvesting strategies that might make sense, help your clients avoid a lot of the pitfalls of taking distributions in retirement that they might not be aware of, that you might not be aware of. So we will jump into all of that today. So Covisum literally means shared vision, right? Co meaning joint or shared, Visum meaning vision. So we create a shared vision between you and your client. We do that through software, training, and support. You'll notice that if you click on the softwares, we have 3 different programs. Our focus today, folks, is really going to be right here in the tax clarity. But a lot of the things that intertwine with the way that you plan for a client's retirement, Social Security is a big aspect of that, and so is Smart Risk. But if you have not done so yet and you plan on doing this, take a 10-day free trial. Don't put in a credit card. You're going to be able to run as many reports as you like, interact with our support team during that period of time. They're going to save you a ton of time with being able to call up, ask questions, and get those answered without having to go out and do that type of research for yourself. So they're going to be a great time saver for you and then help you provide the best answers you possibly can for your clients. And we do that with all of the software programs that we work with and distribute from this website. So when we click on blog, this is a great way for you to get an idea of what Covisum does. We have a variety of different articles on here. We put our white papers on here as well. If we have webinars or something coming up, this is a great place for you to locate that information. You'll notice that you can put in your email address and choose daily, weekly, or monthly. Or if you don't want to do that, then don't. Just visit the website every once in a while and you'll see what we've got going on and what we're looking into right now. So great place to get some additional information. So that being said, this is your tax clarity software. This is your data input page. We're going to spend a lot of time on this page today as well. But first we're going to jump right into settings so that you can see when you're ready, after you take your free trial, you can click on Manage Subscriptions, and you can come in here. And I don't have any because I'm an employee, but your subscriptions will be listed on this page as well. So pretty easy to locate and find. When you're ready to hit the buy button, we'll also have a buy button up at the top. When we have training, so when you first get on, you'll have access to, during a free trial and then after a free trial, you'll have access to quick reference guides, income basics, tasking basics, different tutorials we have at the end. We have 2 right here in the middle, prospecting with tax clarity and client service meetings. These are really how advisors are using this software program. This is narrated by Joe Alsasser. He's the president of the company. So he has his own practice and he works with the same group of people that you are. And this is how he uses the software with regards to prospecting and client service. They're 10-minute videos narrated by Joe. So for that advisor perspective, my suggestion is take the time, watch those 2 videos. After you become a subscriber, you'll have some additional resources. 1, you'll be able to put your logo on the front of the report. 2, you'll be able to put in custom disclosures. 3, you'll have some additional resources down here with regards to marketing. So if you're looking to get the message out that you're able to help somebody, or you include taxation in the planning process, right? We have PowerPoint presentation. We have direct mail pieces that you can use along with that. If you want a skeleton of a marketing plan, we put that in here as well. And then we have consumer brochures, CPA intro letters, right? Customizable white papers, all things that you can use on a daily basis to help promote what you do and who you are and the direction that you're going as a company. and then practical uses for tax clarity. So we do have a variety of different resources that are going to be available to you as you start to add this into your practice to help you, one, get you up to speed, two, help you get the message out to the public, and three, when you have some questions that you just don't need to look up because you're focused on your clients and you need an answer, we have our support team here to help you out as well. So when I jump into the new clients, it's pretty easy to run one of these reports in about 3 to 5 minutes, even if you don't have somebody's 1040 to look off of, even if you're just running scenarios based off of the most common distributions that someone has. So you'll notice that, one, I can go to married filing jointly, tax status 2018. You'll notice down here it says Apply Tax Cuts and Jobs Act of 2017. If I click on 2017, guess what? It gets rid of it. If I go back to 18, I can access that again. And the reason is past tax didn't have the new tax cut changes, so you're unable to apply it to past years. What you are able to do in 2018 moving forward is either apply the Tax Cuts Job Act of 2017 or assume that it didn't pass. And really the big reason that advisors were requesting this, and the reason why we put that up there as well, is advisors definitely wanted to be able to show the impact of the tax law changes to their clients, right? What happened, and make that comparison. And they can by simply clicking that on and off and running a couple of different reports to see what the outcome or the impact actually is. This is why we put that on there. Brackets and thresholds. This is a great place to start. So depending on how the client came to you, whether it's just a referral from another center of influence, from another client, if it's somebody that's coming to you off of a seminar presentation, or whether we have a current client that needed a little bit more information on taxation, you're going to help them out to avoid some of those missteps, but you want to give them an idea of what's all involved, just a high-level view. This page is actually great. So we can come here and we can say, for regular, our tax brackets, thresholds, and for ordinary income, we have brackets between $0 and $19,000. You pay 10% on the dollars that fall in that bracket. From 19 to 77, 12%, all the way up to the highest tax bracket of 37%. A big change with the new tax law was we had to decouple capital gains from the ordinary income tax bracket, and the reason is $200, frankly. You'll notice that they're slightly offset, so we did have to make that change inside the software, and it is in there. But you'll notice that for capital gains from 0 to 77,000, we have a 0% tax bracket. From 77 all the way up to the highest bracket, 15, and then 20 after that. So it's good to point this out, because when we take a look at this landscape view map, what you're going to notice is this is not what you're going to see. And the reason is because we have thresholds and exemptions, right? A lot of things going on behind the scenes. Standard deductions. So if we're under the new tax law, one, we have a higher standard deduction and no personal exemptions, right? If we're not under the new tax law, you'll see a lower standard deduction and a personal exemption. We have over 65 or blind credit, and then Social Security is in here as well. Social Security is not taxed unless this provisional income formula decides that some of your benefits should become taxed. And this is the short version of this. It's half of your Social Security benefits plus all other taxable income. It's a very short version of it. Gives you your provisional income. And once you breach certain thresholds, it starts to drag in some of your Social Security benefits and call it and have it taxed. So this is in that thresholds and exemptions as well. And then we have Medicare monthly increases, which you can or cannot include in the report. It's really up to you. It doesn't necessarily match up really well to your tax returns if you're making that comparison, if you have the Medicare monthly increases in there. That being said, if you break certain thresholds, you start paying more taxes or paying more for your Part B and your Part D. So now that we've got a general understanding of how taxes work, let's run a quick case. Going to do a married filing jointly. If we decide to take a look at future years, in which we can do that right over here, I can put in an inflation rate. We are going to apply the Tax Cut and Job Act. Right, I'm going to actually exclude the Medicare premiums, and although I can put some dependents in here, I don't have to. So you just have the option to be able to include dependents and see what the outcome is using those fields as well. When we take a look at income sources, it's pretty straightforward. What we've done is pull out all of the most common income sources that you might see on the 1040 and displayed them here. So we have earned income, IRA distributions, long-term capital gains on the capital gain side, short-term qualified dividend, pensions, tax-free interest, and Social Security. You'll notice that each one of these is designated by the line that you can find them on the 1040. All other income for ordinary income is actually grouped under ordinary income. If you hover right over this little question mark, it'll tell you just add up everything here and put that value right there, and you're done. Now, if you have some folks that are self-employed, right, we have self-employed income, specified service business income, qualified business income down below, depending on what applies to your client. As far as deductions go, just a grouped above the line deductions and IRA/plan contributions. So obviously this was a big add for us as well. A lot of folks were saying when we add IRA and /plan contributions, where can I put those values and then run one of these tax reports? This is where that's a new field along with the qualified business, specified, and self-employment as well. So give me 1 second here. So we had a question that just came in that says, how about rental income, right? That's a fair question. So I don't know where it would fall in here specifically, but that's why we have the support team. I don't dig as deep into this tool as they would. I mean, the general consensus is how do you use this tool and how to use it with your clients. That's where my focus is. Where specific fields actually go, I will make sure that the person that answered this question also knows where that's at. Or if we don't include rental income, I will give you a reason as well. So hopefully, if you have another email besides the one you used to sign up for this webinar, just go ahead and type that in and send it on over. I'll make sure you get your answer as well. If not, I'll just use the one that you have on file. So I do appreciate that. If you do have a Schedule A, right, this is where you can enter in those fields. Thank you. Right here. So when a client comes in, if they have a 1040 and a Schedule A and a Schedule D, because you'll notice capital gains as well, make sure that they bring all of those in. It'll help you run these a little bit quicker and see where they currently are at with their last year's tax return, and then have that conversation about how that might change moving into retirement. So the first one we're going to look at is earned income. We'll put in the $80,000. It says rate on the next dollar of ordinary income. Take a look at our landscape view graph here, right? It's pretty easy to understand. Very much matches the brackets that we had for ordinary income. If I went into capital gains, you'll see that it matches the capital gains chart as well, based on ordinary income. And what we have here is we don't start at $0, because we have the standard deduction. These folks are over 65 years of age, so we have deductions there as well. So right around $20,000 is when we start to pay taxes of about 10%, all the way up to about 33%. And you'll notice this steps up just like the tax brackets. It's a progressive tax system. Over here is your effective marginal tax rate. So when we see the green dot, it says we have a base EMR, so effective marginal tax rate. At $80,000, we're currently at 22%. Now, that's not 22% for all of the income that we have. You'll notice down here, it says income $80,000, total tax $78.41, and effective rate is 9.81% on total income. But the next dollar of income that I either earn or take out for ordinary income is going to be at this 22% rate. And I can visually see that I can actually earn up to $102,000 before I see a tax increase. Now, it does get a little bit weirder with when we add in a little bit different income besides earned income. You'll notice if I get rid of regular tax brackets, we have our effective marginal rate that currently is mirroring our regular tax bracket. And that's just because we have earned income and there's not a lot of complexity in this. When I click on the chart, what I get is my ordinary income over to the left-hand side so that I can make adjustments and run scenarios. So if I earned $1,000 extra, over the 80 that I was anticipating. You'll notice down here it says $1,000, additional tax 220, effective rate of change. I paid 22% on that $1,000 at, and my net additional income is $780. Right? We'll get into some different scenarios here in a second, but if you understand the whole concept and how to read the chart, it makes it a lot easier. When we look at the details, pretty easy, right? Tax year, date of birth, number of blind over 65, the inflation rate we would have used, and our earned income. Now, if I have other income sources, it's going to list those out. And then the base calculations for determining what your tax situation actually is, right? AGI, MAGI, deductions and exemptions, provisional income when it comes to Social Security, taxable ordinary income tax, FICA, and then total tax right down at the bottom. So pretty easy to use and understand, right? If I wanted to alter capital gains, I'd come over here and I'd make adjustments to our capital gains as well, right? Let's go over here, get rid of our scenario 1, and input our data and make this a little bit different. So I have $0 worth of earned income, $35,000 worth of IRA distributions, total Social Security, let's say $55,000, and update scenario. So this is what that chart looks like today, right? It's a little bit different than before. You'll notice we see this gray area and this massive increase up to 41% here. And this is really due to Social Security. This is a chart that is we're having changes based on Social Security benefits, right? So provisional income, you'll notice, is 62.5. If I click on the chart and I add an additional $4,000 worth of IRA distributions, you'll notice down here provisional income increases to 66.5. So essentially, for every dollar that I took out past the $35,000, and we can see it visually on the map up above, right? $4,000, additional tax is $880, effective rate is 22.2%, net additional income is $31,112, right? Which is perfectly fine, but if someone's taking $4,000 out of an IRA distribution and they're not aware that they're causing other benefits that aren't currently being taxed to become taxed, not receiving any additional income, they might expect that they're going to pay 12% on the $4,000, not 22%. That can become enough a shock when it comes time to pay that bill. So this one helps you illustrate what's actually happening, explain what's going on. In this case, provisional income reaches a certain level, and we have stair steps up where we start to be taxed not on the distribution from the IRA in this example, but we also pay taxes on the IRA and our Social Security benefits. So visually, it's very easy to see. 2, it allows us to easily find out how much money we can take out before we see a massive step up to, in this case, to 41.15%. And it also maybe opens up some harvesting patterns that might make sense. The idea, obviously, if we could live in this 0% tax environment, that's obviously preferable for a client retirement. So does it make sense to take Social Security now? This is just an example. This doesn't fit the mold for everybody, obviously. But if this is a thought process on what somebody is about to do, when we go over to input data, is they're going to start taking $35,000 out of the IRA, and they're going to take their Social Security benefits, and it's going to be $55,000. Would it make more sense to withhold our Social Security benefits and draw down on this IRA, and let's kick that up to $90,000, I think it was what it was, combined. Let's get rid of our scenario, reload the chart. We pay a little bit higher taxes, obviously, up front to do it this way, but if you start to draw down on some of our IRA distributions and delay our Social Security to get a higher benefit at that point in time in the future, then we start to live in this zero tax environment down the road. So let's go to our IRA, get rid of that, Bump our Social Security up to $65,000. Take $25,000 moving forward. And we might live in a lower tax environment than we did previously. This is just one way that you can use this tool to identify different harvesting or planning options that might make sense with regards to taxation when you incorporate this in your plan. Now, oftentimes what you might have is a client that comes in and says, hey, I'm going to take a vacation, I'm going to remodel my kitchen. Where should I withdraw this money from? That's a completely separate question that you can answer using this software as well. We can go to capital gains and say, what happens if we take $10,000 out or recognize long-term capital gains, maybe in the amount of 12 grand, and see what the tax impact is, right? 10.67% additional tax, 1280, and it gets us to roughly our $10,000. Actually, we can probably kick that down $1,000 and almost puts us right on the nose. Or maybe we're harvesting this from ordinary income, IRA distributions. What happens if I tack on another $10,000? One only gets $7,700. So how much do I really have to take? We're going to start to pay a little bit more taxes here. And we're right close to our $10,000 need. So how much do we actually have to take out? What's our total tax bill for taking out that additional income to take that vacation or to make those home changes, and to help your clients answer those questions on a daily basis? So a variety of different ways that you're going to use this tool moving forward. Now, if you are ready to run a report, and maybe you're using this tool to develop relationships with other centers of influence, you might do a quick print screen here. And you might be saying, hey, it's just a print screen. Yes, it is. But we get the larger graph than the consumer report. We get all of the input data, which is in the consumer report. But it's a quick 2-pager with our disclosure on it, which is ultimately a request from a lot of advisors, is to be able to visually have a quick conversation with CPAs and EAs about a specific situation regarding taxes and why we might want to distribute from one source opposed to another, which is typically something that they might not do when just preparing taxes. But if you're working with the client, you might just click the PDF button and get the nice 7 or 8 page report and go over that with the client. Now, if at any point in time you need help from our support staff to look at one of these cases, we can de-identify any of this information by clicking on the Help Me button. Click Yes, call our number, and just let them know that you had sent a case over to us. We can look you up via your email, push a button, and start to have that conversation with you right away. So just a great way for us to help facilitate that support process and make that a little easier for you, a little easier for you to answer questions as well. So this is what the report looks like. I just threw in one of our logos real quick. We've got our assumption page. You'll notice this looks very familiar, stuff that you can do on screen. You're going to be able to have that same conversation when having a hard copy of the report, right? Conversation about the income tax, capital gains, Medicare monthly increases. And this specific report has the Tax Cut and Job Act changes, so we wanted to be able to note that in the About This report. Coming down and being able to have a federal tax comparison between our base case and our scenario, and then start to break that down, right? What's our top marginal rate? 48% in this case. Current marginal rate is 22.35, and I can take an extra $12,000 out before I jump up to the next marginal rate of 32.5%. We break that down for ordinary income, capital gains, and qualified dividends. Again, I'm able to have that conversation. Let them know what their standard deduction are, right? Tax estimates, getting in the effective marginal rate for the next dollar and overall based off of the base case. And then you'll notice this repeat, so you can have that conversation about the scenario, put these pages next to each other to make those comparisons, and really start to have the conversation about how this fits into that overall retirement plan, which is ultimately what you want to do. Break down into scenario 1, and then probably one of the most important pages, especially if you're using this to prospect and or if you're just helping clients in certain areas and they're looking for that help with the overall plan. So let me blow this up here real quick. Is tools for tax control, how you're able to help them out. Accountant product taxation, right? Taxable accounts, rollover individual retirement accounts, Roth IRA, product level taxation. Why it's important to have a plan. On the prospecting side, a lot of advisors use this page to start to set that second appointment on developing a plan and making these folks clients. So this is a great place in order to do that as well. After that, we have our disclosures and then a breakdown of, again, inputs and basic formula calculations with regards to taxation. So all great to be able to show the client. Ideally, you want to be able to illustrate certain things that are actually happening inside that client's life, whether it's a rollover, whether we have IRA or planned contributions, if they're self-employed, what's the impact of certain distributions throughout retirement. How can we illustrate that, use that in the planning process? How can I help a client potentially avoid some missteps by pulling money out of places that they might want to avoid, or they might want to look in a different spot in order to do that. So great tool to help you analyze all of those different options. With regards to the rental income, again, right after this webinar, I'll make sure that I get that sent over to you. If there's anybody else that would like that answer as well, please just type in a yes, and I'll use your current email address. If there's some place you want me to send it, send that email address over as well. Any other questions that you might have? And if you're typing something in, I'm not walking away from this. I'm just going to switch tabs real quick. And then we can pop back to this. So if you're ready to take a free trial, or if you're already in a free trial, one, click on Take a 10-Day Free Trial. Just register for the software, get in there, run a few of the reports, and interact with their support team. You'll be happy that you have them. They are second to none out there right now. They work really hard to make sure that you have all of the correct answers in a timely manner. I don't see any questions coming in. So thanks a lot. I do appreciate it. Have a phenomenal